Okay, let's just get it out in the open. Despite a record level of inventory, the sharpest price drops in over a year, and government's borrowing like it's 2020 all over again, Canadians are still buying houses. But who exactly is buying those houses and why? Now might be the worst possible time. Looking, I'm just going to be straight with you. Home sales are up 1.86% from last year. But before I get excited, let's talk about what exactly that means. I mean, before you get excited, of course. Yes, there is activity in the marketplace, but it might not be exactly what you think. Let's talk about the data here. 40,257 homes were sold in August, which is up 1.86% from last year, but still below 2023 levels, and it's historically weak. We've got record inventory, 75,000 plus listings, almost 76,000 in August, the most for any August on record, and prices just dropped 0.9% in a single month. So, with listings up 6.14% from last year, growing at a pace over 3 times greater than sales, here's the kicker. The government is borrowing $71.3 billion per quarter, like we're still in a freaking pandemic. And while the Bank of Canada just cut rates to 2.5%, hoping to spark investment, historically doesn't necessarily happen that way, at least not immediately. The net government stimulus issuance is $71.3 billion in Q5 2025, which is the largest quarter since 2021 at peak pandemic status, albeit. But before we talk about who's buying real estate, let's be clear about what sales are up and what this actually means in 2025. People are going to buy real estate. People are going to want to move. People want to live in houses. People want to purchase. Just because there is a quote unquote housing crisis or collapse or lack of sales in Toronto and Vancouver condos doesn't mean nobody's going to buy real estate. But here's the thing. People hear sales are up and they think the market is recovering, but the context is really everything. Prior to 2020, you'd have to go back to 2012 to find an August this week. So really the key question is, does this present one of the best buying opportunities before the rate drops actually kick in? And yes, sales are higher than last year's unmitigated disaster, but we're still historically in weak territory. It's like saying you're feeling better because you have the flu instead of pneumonia, which is not good because I've had pneumonia quite a few times. And while sales crawled up that 1.86%, new listings exploded 6.14%. And that has to be part of the picture. That's sellers rushing to the exit 3 times faster than buyers are coming in the door. Supply and demand, the dynamics themselves explain why prices are falling despite the increased activity. The result is that the sharpest monthly price drop in over a year at 0.9% or $6,500 less nationally than August. That's 0.9% means the average home price in Canada is $686,800 in August of 2025, which is the largest monthly drop in over a year. But who's actually buying? Well, for some, they think it's absolutely not investors. I would say, amateur hour investor has completely come extinct in Canadian real estate. Now, that doesn't mean nobody's investing. That just means that the amateur investors are, for all intents and purposes, missing right now. I get calls every day from investors saying, can you help me refinance this property I bought 2 years ago? But nobody, and I mean nobody, is calling asking for a pre-approval just casually to buy a rental property today. With one caveat, one giant exception. Those are the folks that I would consider to be the quote unquote experienced or professional investors in this market. And we can get into what they're buying specifically at a later time. But the truth is, we're seeing less and less of those casual investors. So these investors that I'm talking about are the ones that, quite honestly, have been experienced or have been thinking about it for a long time and they're ready to hop into the marketplace. There's some move up and move down buyers right now. But here's my advice if you're one of them. Sell your freaking house first. You must sell your existing home before you get out to buy a new property in this marketplace. The biggest segment driving the activity that we have right now, and I'm seeing this anecdotally, is first-time home buyers. And I know for a lot of people that sounds crazy giving these prices. More specifically, when you think about the amount of money required to put down on a property to get into the marketplace, I recently saw a statistic that said that in the United States alone, now this is the US, not Canada, but the United States, over 50% of new buyers got a gift. In Canada, I don't think that number is that high. I think the last time I saw the stat was early this year, but it was around 33 to 35% of home buyers, first home buyers, getting a gift to get into the marketplace. Now, I'm going to take a step back from all this information and data, and I will tell you a few things. Number one, there are people, and more people than last year, buying. I know it because I can see the statistics in my own business, and in addition to that, I see the statistics nationally. But relative to the amount of listings in the marketplace, there are not as many buyers. So the big question that people are asking and should be asking themselves right now, are we getting somewhere close to a price floor, and does it actually make sense for people to get back into buying in the marketplace? Now, before I get down that road, I want to talk about this first-time home buyer phenomenon and what's going to happen in the marketplace. Now, these aren't all young people. Let's talk about first-time home buyers right now in the marketplace. When someone thinks first-time home buyer, they think 25-year-old to 29-year-old kid, and that is just not what I'm seeing right now. In fact, I've got first-time home buyers I'm working with right now that are in their 50s. Some of these first-time home buyers I'm working with are in their 40s. A lot of them are in their mid to late 30s, and they're just fed up with the idea of renting. Renting, although overall rental rates have come down, it's still freaking expensive to rent in this country. And a lot of people want to move on with their lives, which is why they are looking at buying in this market. And if you look at things relative to where they were last year or the year before, property values have come down. So for a lot of people, it is an opportune time, and it is the right time. And let's be honest, real estate is not like a stock. You buy it, you move in it, you live in it for an extended period of time. Overall, it makes sense that we're seeing the first-time home buyers get into this marketplace, and they will be the first of the dominoes to actually fall. There's this desire to own a home because people hate renting. They hate dealing with the landlords. They hate dealing with uncertainty, and they hate not having control over being able to paint and adjust and renovate and do whatever they want to their own living space. So I want to point that fact out because it's not always a investment-based decision for people buying their own home. And truthfully, I think it should be this way for a lot of people. And for a lot of people with different cultural backgrounds who've coming to Canada, home ownership means being able to touch grass. It means having your own outdoor space and not living in just a high rise. Believe it or not, a lot of people came to Canada with the belief and the dream of having a job, saving up, and owning a home. And just because you think it's not a good investment and the market thinks that, they don't agree with that. They think this is an incredible place to own, and they see the long-term value. Now, there are some people, of course, that want to live in a high-rise in a condo, and they'll purchase that, and they'll see the values, or maybe not for the most part. But for a lot of people, it's buying a single-family home or a townhome is the dream. And if it's a possibility, they're going to get into the marketplace right now. Now, there are still first-time homebuyers buying condos in more expensive cities and communities, but with an opportunity and looking at the goal of being able to purchase something in that single-family home or townhouse range, that is what we're seeing. And the reality check is you probably need an income of $275,000 and a down payment of $250,000 to buy a low-rise home anywhere near Toronto or Vancouver. But if you step outside of those markets, the income amounts go down, and we can start to see people actually getting into low-rise properties. The concrete numbers explain the market constraints. I mean, this is why we're also seeing property values in multiple markets go down. Now, here's what you should really concern you about this market activity. And this is concerning for me, is the government right now is borrowing like we're in a freaking crisis. $71.3 billion of net government spending in Q2 of 2025. That's up 53% from Q2 2024. That is no joke. The federal government alone borrowed $38.1 billion last year, up 346%. Last quarter, from last year. That's pandemic level borrowing during supposedly normal times. Crazy. Levels on par of 2020 and 2021. What the frick is going on? And here's the really concerning part. Canadian banks are buying this debt at record levels. When banks park money in government bonds instead of lending to businesses, this is a huge red flag. And it often predicts the conditions of 6 to 12 months ahead. Charter banks set a new record for bond purchases, surpassing an all-time high, which explains why the bank portfolio allocation matters for real estate. This is not normal, folks. Banks are buying government debt, which basically says we have a very weak demand for credit. businesses and homes, people are pulling back. They're not spending the money right now. Credit demand is a major indicator of the country's economic activity, and it impacts real estate health. So if you're not connecting the dots together, basically, in short, governments are spending money, people are not spending money, there's less debt from people, we see less spending on everything, including housing. So to fast forward, the Bank of Canada just cut rates to 2.5%, which supposedly to spark investment and economic activity. But here's the thing. This quarter point cut represents something, and the strategy that it does represent, it's failed before. BOC cut overnight rate by 25 basis points, the lowest level in 3 years, to support demand and keep inflation near target. But look back at 2015 during the oil shock, or 2008, 2009 during the financial crisis. Every time they cut rates to address trade problems, the cheap credit flows back into real estate and not into productive investments. Now, here's why this matters to you. Rate cuts tend to fuel asset bubbles rather than economic productivity. And as I mentioned, 08 and 09, 08 and 2015, they saw the shocks. Cheap credit flew into unproductive allocation. There's a reason to believe that this could actually work its way back into the real estate market as it has before. Maybe not immediately, but over a relatively 6 to 12 months period of timeline. The bank says business investment has declined because firms are cautious to weak demand and trade uncertainty. But cutting rates won't fix that uncertainty. That's a policy problem, folks, not a money problem. Meanwhile, without going too deep down this road, we've got record capital flight. As investors are dumping Canadian assets, rate cuts might actually provide short-term relief right now, but they're probably making confidence worse long-term. So let's move forward. What does this all mean for buyers and sellers? Because that's why you're watching this video, isn't it? What does this mean? If you're thinking about buying or selling right now, like looking at this macro analysis and looking at it from an actionable perspective, if you're a seller, understand that record inventory means you're competing with 75,959 listings in August alone. But let's break this down. Realistically, you're not competing with that. You're competing with your neighborhood and your neighbor, but you're competing with 3 to 5 to 7 to 10 to 20 to 50 properties that are similar to yours in a very similar area. And in those areas, this favors buyers in these markets right now, which means if you're selling a property, you need to have realistic expectations. Otherwise, you're going to get caught on the way down chasing. And that I've seen that already this year. Prices are down 19.4%. That's 20% from 2022 peak. And with government borrowing at crisis levels right now, plus the weak economic fundamentals, there could be more downside ahead. And there certainly will be for condos and properties that there's a lot of. Not for everything. Certainly not for everything. But with typical homes going down 20% since March 2022, even as borrowing costs have come down, there is a trend that you have to pay attention to. And if you're a buyer, yes, right now, there are opportunities. If you want to buy and get in the marketplace right now, I'm not saying it's a bad time. It is a great time if you're ready and you want to own real estate, but don't mistake current activity for market recovery. Most of the buyers I'm seeing right now are driven by a desire and necessity, not necessarily only by opportunity. So let's explain that really quickly. The desire to own a home is a real thing, and it's not going away. But wanting something and being able to afford it sustainably are two separate things. There's no way to determine whether or not we're seeing today being the bottom, or 3 months or 6 months or 12 months at the bottom of the real estate market. But we are relatively close to some form of a, I don't want to say bottom per se, but some form of a lower market situation, which could mean that we will see property values start to slow down the dip unless something massive happens, especially with the stimulation. And if the market doesn't pick up because the BOC doesn't keep cutting rates, so for example, if they continue to cut rates, then that stimulation will eventually work its way back in the marketplace, and we will start to see that buyer demand continue to rise. And we will probably see listings jump off the marketplace, which will balance things out. And the truth is, home ownership desire remains strong despite the affordability constraints, which means we're in a position right now where people are looking at this and saying, look, they're buying houses, and that is a fact. But what I don't want is to confuse activity with recovery or stability in this current marketplace. Sales are up, but they're historically weak. Prices are falling, and inventory is still sitting at records, although potentially going down. We've got record inventory, the sharpest price drops in over a year, and the government is borrowing money like it's a crisis right now. Basically, my feedback is this: if you absolutely must buy or sell, go in with your eyes wide open. There are a lot of opportunities, and I'm seeing people do really, really well. It's not 2021. It's not even close. You're in a better position right now. It's not 2022. You're in a substantially better position. The economic backdrop right now suggests that there might be more volatility ahead. And so basically what I'm saying right now is with the affordabilities talk with the politicians right now talking about affordability, basically they're just talking about creating more rentals. And with the desire to own a home being very strong for a lot of people, we should hope they eventually make it easier and better. But unfortunately, that probably isn't going to happen. And so truth is we will probably see relatively lower prices ahead in this marketplace in many areas. But my feedback on this, to sum it all up, is that people are going to buy in this market. People have a desire and they will not wait forever. There's a lot of reasons it makes sense to purchase and not wait anymore. But those that are going to buy right now because they think it is the best time may want to wait. What could switch this dynamic is relatively straightforward. If we do see rates continue to tumble down, we will see more buyer demand, but it also means the economic activity will not do well. I think it will be years before a lot of these condos see the demand come back, but we're already seeing markets with single family homes, particularly more accessible price points. The demand is starting to come back up in those areas. And so basically what I'm saying is it really depends on your situation. For a lot of people, it makes a lot of sense to buy a home. Just make sure you're owning it for a long time. For some people, it makes zero sense at all because they don't have any intentions on holding on to it for an extended period of time. If you value home ownership, you want to renovate your property, you want to clean it up, you want to create value on it, you want to raise a home with your kids, then buy the freaking home because it is a great value. But if that's not you, then you probably shouldn't be buying in this current marketplace. And you can wait. The one thing I will say is don't wait forever. Chances are when we see things come back up, whether it's in 3, 6 months or 12 months, we'll be in a position where you'll be chasing it back up, which is not a position that you want to be in. If you found this helpful, make sure to subscribe. If the reality helped you to check to understand what's actually happening in the Canadian real estate market. And I'm going to continue to break down which markets are seeing the biggest price drops in future episodes, as well as more frameworks around real estate mortgages. Again, if you found this information helpful, you can find me on Instagram at themortgagepug or with my company at Flow Mortgage Co. Click below if you want to get a consultation from my team and I to see if it makes the most sense to buy in this market or not. And of course, subscribe. Let us know if you like the episode. We'll see you on the next one.